Hello, my dear students. I hope you are doing great. So, today we'll be covering our Schedule 3 amendments. Our Schedule 3 of Companies Act, which basically covers our balance sheet format, our SOPL, and the disclosure additional requirements which are there. So, there have been a few changes in that. Some changes, some additions, some amendments which have come. This is going to be affecting my accounts, advanced accounts, and even our auditing. Because in auditing, we have a chapter number 9, auditing of items of FS. So all these changes automatically get reflected over there. In fact, most of these changes are also applicable for the Ind AS based financial statements, which is in CF final financial reporting. So when I talk about these amendments changes, does it change our sums or the basic way that we have presented our balance sheet? Well, very minorly. I will show you exactly where it is going to be changing. Okay. Other than that, most of the things are disclosure requirements. Additional disclosures have come. So they will not affect your sums. The way we have solved it, the format and all will not be affected much. So come on, let us start with this. So here now we start with this. Division 1 we have got. Division 1 is for those companies which follow accounting standards. And Division 2 of Schedule 3 is for those companies which follow Ind AS. So now in Division 1, whatever changes are there, I have done them in italics. Okay, so in the entire notes, wherever you see italics, these are the changes which have occurred. So the first change has occurred in point number 4. Remember, we have got this rounding off concept, correct? So earlier we had got rounding off. Rounding off was for your, it was not mandatory. It was you may do it. Companies may choose to do it. So the first thing which has occurred now, they have now done it that companies shall do rounding off. Rounding off is now compulsory. Okay, first thing. Second thing, earlier the rounding off was based on turnover based it was. But now it is based on the total income. So depending on the total income. So what is included in total income? Remember our P&L format. First we have got revenue from operations. Then we have got other income. And then these two used to be earlier called total revenue. But now this is called total income. This is only one change which has happened in the P&L. Okay, so now that total income including what? Revenue from operations and other income. Depending on that, the rounding off will be decided. So if your total income is 100 crores, less than 100 crores, then rounding off will be to the hundreds, thousands, lakhs or millions. And this is the same. It's only the total income which has come rather than turnover. Okay. So the limit has not changed. The rounding off that amount, the thing has not changed. Similarly, if it's 100 crores and above, then it is going to be to the nearest lakhs, millions or crores thereof. Okay. So this is what we have. And whatever you choose, you have to use it uniformly throughout the financial statements. So I cannot say that my balance sheet is in lakhs and my P&L will be in thousands. That is not going to be allowed. So it is going to be uniform throughout the financial statements. So this is the first simple change which has occurred. Okay. Then going further, now comes my balance sheet format. The main thing, the balance sheet format. So in my equity and liabilities, there is no change in the format. But yes, in my assets, there is a small change which has occurred. Okay. So in our assets now, what we are going to have, non-current assets, current assets, this is our main two heads. That is the same. Okay. But now the first one which we have under non-current, we call it PP and intangible assets. Okay. So earlier we used to only call it PP. Now we call it and intangible assets. So both. So we have just added that. So in all the sums which you are going to write, you write PP. Just write PP and intangible assets. That's it. Okay. Under that, we have got four things. Okay. We used to say tangibles, intangibles, capital WIP and intangibles under development. Now, instead of calling it tangibles, we call it PP. That's it. Okay, so PP and intangibles will be the main head. Under that, you're going to have PP, then others are all the same intangibles, capital WIP, and your intangibles under development. So, this is the change which has occurred. Current assets, no change. So, this is a very minor change, but yes, it will affect your format of the balance sheet. So, you have to be careful. Now, other than this, most of the requirements are going to be just your disclosures. Okay. This will not affect my sums. Now, for example, in share capital, okay, share capital, all these things we have already learned. Okay, these are the things we have to give in our notes. But now what extra has come is point number M. Can you see that? It is in italics. So in share capital, what additional disclosures are required? We have to disclose the shareholdings of promoters. Okay, so in the notes, we are going to write shareholding of promoters in terms of what is the name of the promoter, how many shares he is holding, what is the percentage of the shares that he is holding, and if there is any change during the year in his percentage of holding. Has he additionally purchased some shares, or has he, sold some of his stake? Whatever it is, you have to give that. So you can see promoter is as defined by Companies Act. Give for each class of shares, whether you have got equity, preference shares, whatever. And percentage of change will always be calculated with the base of the number at the beginning of the year. Okay. Or if it is issued during the year, then with respect to that date of issue. So when we calculate percentage of change, I need a base now. So earlier I had got say 100 shares. Now I've got 110. So it has to be in terms of that. Okay. So the base is going to be on the basis of the beginning, whatever number of shares were there at the beginning of the year. So we have to see that. Simple. Okay. So this is a disclosure requirement additional. Not going to affect my sums. Okay. So reserves and surplus, nothing is there. Long term borrowings, we have got nothing. Yes, in short term borrowings, we have got something. So in short term borrowings, you will see in red color, I have given you italics. We have written here, current maturities of long term debt shall be shown separately. What is this current maturity of long term debt? Now, whenever we have got long term loans, the amount which is payable within 12 months, we show it under current liabilities. So even if I have got a 10-year loan, say I've got a 10-year loan from HDFC, whatever amount of installment principal amount is payable within 12 months, I used to show it under current liabilities, and remaining we show it under non-current. So now this we will be showing under short-term borrowings, whereas earlier we were showing this under, you will come here, do you see point number G? Earlier we used to show it under other current liabilities. Now they say no, we cannot show it under other current liabilities, please cancel that. This will be shown under borrowings. So from here they have cut it and they have put it under your short-term borrowings. So this is the change. Okay. So one, cut it from other current liabilities, and this show it where? Show it under short-term borrowings. This is the change which has occurred. So here I will write down, where is it shown? Shown under short-term borrowings. I hope this is clear. So this is again another small change which has occurred. Then going to my PP. Now remember, we call it not tangible assets, we call it PP. So PP may point number 3 may, you will see in red again I have given you the change. If at all we give the reconciliation, right, in point number 3 we give reconciliation, opening balance and whatever additions, disposals have happened, and then we tally it with the closing balance, right? This is what we do. Along with that, now additionally what I have to give any amount of change due to revaluation. If any revaluation has occurred, okay, in the PP, and that revaluation is 10% or more in aggregate of the value of the PP of each class. So suppose in land there is a revaluation which is like 10% or more, then we will have to give that separately. In our reconciliation, we have to write that also. Okay. So this is what we have, and same thing we have even got for intangible assets. In intangible assets, point number 2, you can clearly see there also, if there's any change due to revaluation 10% or more in each class of intangibles, we have to show that in our reconciliation. Okay, so this is a change which has happened in both tangibles and intangibles. In the RECO, you just have to add this one extra item. Fair enough? Then going further, investments we have no changes. Long-term loans and advances. Earlier, under long-term loans and advances, I used to be showing security deposits given as security, maybe for taking a property on lease or something like that. For business, we might have given some security deposit. We used to show it under long-term loans and advances, but now they have cancelled it. So it is cancelled. And where has it gone now? It has come down under other non-current assets. So it is still we are showing under non-current, but we have changed the head. So where is this being shown? This is shown under other non-current current assets, not under long-term loans and advances, security deposit. So if any sum you have this, just be careful, show it under others. Okay. So this is the change which has occurred. Current investments, nothing. Inventory, nothing. One change I missed out was in trade payables. Just come to trade payables here. I missed out this one. Trade payables, we also have to give an aging schedule. And this aging schedule is now quite important in my Schedule 3 amendments. Okay. We have got aging schedule for debtors, aging schedule for trade payables, creditors, that is. We have got aging schedule even for our, intangibles under development for capital WIP. So what is aging schedule? So we have to give according to the age of the creditor. So how much time it has been due. Okay. So you can see the aging schedule what we have to give. Less than 1 year, how much is outstanding? 1 to 2 years. And this we have to see from the due date of payment. So once the due date has happened, after that if it is still overdue, it has not been paid, how old it is. Okay, so if the due date was, for example, March 2022, 31st March, and it has not been paid till, let's say, June, so then that less than 1 year it is outstanding, like that, after due date. So this is what I'm trying to say, from the due date of payment. Okay, so this will clearly explain that company is not being able to pay their trade payables in time and how long and overdue they have been. Okay, less than 1 year, 1 to 2, 2 to 3, and more than 3 years. And here also you have to give the breakup. Is it for micro, small, medium enterprises, or is it for others? Are they disputed dues, or are they others which are there? I mean, disputes are there, that's why it has not been paid. Whatever the things, you have to give the breakup like this. I hope this is clear. So this is one thing in trade payables. So I hope this is all is over. Now we're going further to our, can you see trade receivables? Yes. So trade receivables also we are giving a schedule here, an aging schedule again. Now again, the aging schedule we are giving from the due date of payment, how much we have not been able to collect. Less than 6 months, 6 months to 1 year, 1 to 2, 2 to 3, and more than 3 years. Again, we have to give the breakup between, if there's any dispute, we will show it separately. Point number 3 and 4 is for disputed, which are considered good, which are considered doubtful, and undisputed, again considered good, considered doubtful. So we need this aging schedule. Okay. So aging schedule for trade payables as well as we have word for debtors. One thing remember, in our trade receivables, it is less than 6 months. There it was a year. It starts with 1 year. Okay, less than 1 year. But here it starts with 6 months. Then next we have got, all these are okay. No changes. So no changes. So I'm not covering that point. Okay. Point number VA. This, okay, now whatever could affect my my format of the balance sheet, that is already covered. Now whatever I have after this is all disclosures in the notes. Like for example, VA. If the company has taken any loan, okay, from a bank or financial institution, and they have not used it for the purpose they have taken it. So for example, I took a loan as a company for making a building, but rather than making the building, I've used it for some other purpose. Then it has to be reported. Reported in the sense it has to be given in the notes. Okay. So where the company has not used the borrowings from banks and FIs for the purpose for which it was taken, disclose it in your notes where they have used it. What was the purpose and where else they have used it. So this is what you have to give. Simple. Company has to write in their notes. By the way, these Schedule 3, I'll tell you a very small interesting point. Many of these Schedule 3 points, okay, have also come in my Caro reporting. You know, Caro 2020 reporting. That lecture also we are going to have on YouTube. That is going to be, a lot of these things have been also in Caro reporting. Even auditor has to report on this. So company is mentioning it in their financial statements and notes to accounts. Plus auditor will also have to report about it. So, there are a lot of points which are linked. Anyways, this is one new point. And then comes my regulatory information. When I say regulatory information, again, it is pure disclosures. Doesn't affect my sums in any form. Okay. So what are regulatory requirements? We have got a big list of these. So let us go through the list. These are the disclosures which need to be given. First one, title deeds of property. You know, whenever we have property, land or building, it should be in the name of the company, logically. But if it is not in the name of the company, then we need to disclose it here. Okay. So, if at all, if there's any immovable property, right, whose title deeds are not held in the name of the company, right? So, it is not in the name of the company, then we need to disclose. But there is an exception here. Exception is given in bracket. What is the exception? Can you see? It is other than the properties where company is the lessee and the lease agreements are executed in favor of the lessee. See, when we talk about legal form, right? Lessor is the one who is the owner of the asset and lessee is the one who has taken it to use. So asset will be in the name of the lessor legally. But of course, my accounting standard 19 talks about that if it's a finance lease, the lessee will show it in his books. But if lessee is still showing in his books, he cannot be the owner, right? He is not legally on paper, he is not the owner. So that we have not covered. We don't have to give that because it is other than those properties, right? Then the format is which are the PPs, investment properties, either are they held for disposal, are they held for sale, whatever it is. Give the description of the property, the amount, carrying value, the title deeds and whose name give, whether the title deed is in the name of a promoter or some director, since when you're holding the property and why, reason why it is not in the name of the company. There could be dispute, there could be whatever reasons, please give those reasons. So title deeds not held by the company, in the name of the company, give that here. Similarly, secondly, if company has revalued their PP, okay, revaluation can be done, that's not a problem. AS10 allows you to do revaluation, but revaluation should be done based on the valuation by registered valuer. Okay, these registered valuers, we have got separate rules under the Companies Act. So whether company they have done revaluation, disclose, and whether they have done it as per the valuation done by a registered valuer. Simple one. Okay. Third one, if company has given loans, okay, the loans and advances are given to whom? Promoters, directors, KMP, key managerial persons, key managerial personnel, related parties. So company has given loans. Okay, that's one thing. But these loans are given which are repayable on demand. Repayable on demand means what? Company has given the loan and said only when company will demand, that time director will have to pay the loan. So there is no set conditions. It is repayable on demand. That means in this case, company may not demand only the loan. For so many years, directors may be using the loan. Possible, na? So either it's repayable on demand or second possibility, it is without any particular terms of repayment and nothing is given. Just loan is given. Okay. If loans are given with proper terms and conditions, repayment and all that, then it's okay. But if they are given like this, without any specific terms of repayment, or they have given it is repayable on demand, then in that case, we need to give the details in the notes. Okay. Also, these loans are given to whom? Directors, related parties, KMPs, promoters. So, what will we give? Who are the borrowers? These four people, right? What is the amount of the loan and what is the percentage of this amount to the total loans given? So then all the investors will have a fair idea how much company is giving and favoring these directors, KMPs, etc. Okay. Then next is now aging schedule. Again, we have got a aging schedule for capital WIP. See, in our non-current assets, we had got PP and intangibles. Under that, we had got PP, intangibles. Then we had got capital WIP and we had got intangible assets under development. So we need to give an aging schedule for both of these. Okay. Now work in progress. This capital work in progress may be going on for some years. Similarly, intangible assets also same thing. So we need to give the aging schedule in terms of which are the projects under process, how much time they have been in CWIP? Is it less than a year, 1 to 2 years, more than 3 years, 2 to 3, and more than 3? And this total amount you have to give. Projects in process, project 1, project 2, you have to give in detail. Plus you have to give it is suspended anything. Like for example, due to COVID, maybe they have suspended the project. Possible, no? Suspended means temporarily they have stopped working on the project. Give all those details. And this total amount should tally with your CWIP amount in the balance sheet. It should tally. Simple. Also, if you had something in WIP, capital WIP, say every company is doing capital work in progress, they are having some plan in mind. This will go on for 3 years. It's always there, any project. Now, if they have surpassed that 3 years time, okay, that means they have exceeded their due date. Its completion is overdue or exceeded the cost. They have also gotten cost estimate. Have they exceeded that cost? Or they have exceeded the due date as per the original plan? Then that also we have to give details in this format. Okay. So what will we give? These are the names of the projects. Again, it was to be completed in this period. It is overdue, exceeded the cost, whatever. Give the details. And also if there is any suspension, give that as well. So even your capital WIP, we want details of your projects. The time, is it in schedule? Is it within the cost? If not, disclose everything. I hope this is clear. And same point number 4, same thing, exactly same applies for intangibles under development. Again, we need to give an aging schedule, right? Even if there's suspension, then that also. Again, total should tally with intangible assets under development in the balance sheet. And again, if it is overdue or exceeded the cost, we need to give the details. Same way as how we saw in our capital WIP. Okay. Then point number 6. Just one small change here. This is intangible assets under development. Here now, it has come by mistake CWIP. Just make the change. That's it. Now, next we have got, is there any Benami property held? So what are Benami properties? Where there is no proper name. There's no proper name means actually the legal owner is someone and the beneficial owner is someone else. Okay, these are like, for money laundering and all, they do these things where it is taken in the name of some other person. Okay, so is there any Benami property? So there's a specific Benami act we have got. So is there any property held, or is there any proceedings or case against the company for holding Benami property under this Benami Transactions Act? If yes, there are cases against them, then disclose. Disclose what? What is the property? When it was acquired? What are the amounts? Who are the beneficiaries, right? Is it mentioned in the balance sheet? Give the reference to that. If it is not mentioned in the balance sheet, say that it is not mentioned in the balance sheet, and what is the reason for it not being mentioned, etc. Whatever legal case is going on, give the details of that, proceedings, status, etc. So any Benami property is held, we want the details over here. Okay, right. Then, 7th point. If company has taken borrowings from banks or FIs, but these we are talking on the basis of current asset security. Normally when we talk about overdraft or we talk about cash credit, so these are generally short-term loans which are taken on the basis of current assets like your stock, your debtors, etc. So if you have taken any loan, then you are aware that we have to file with the banks. We have to file with the banks a statement of the current assets. What are the stock, details of the debtors and cash and bank and all that you have. So if they have taken this, we have to disclose whether quarterly returns have been filed by the company with banks, and are they in agreement with the books of accounts? Earlier it used to happen many times. They used to just send random figures, it's okay. But now it's very strict. Now your banks are strict, even companies have to be careful. So in that case, you have to see that whatever you are filing with the bank, these are my current assets, whether those quarterly returns are tallying with your books. Whatever books you're showing current assets and what you have shown there, are they tallying? First thing. If not, Not tallying, then give the reconciliation, give the reasons, disclose why there were differences, discrepancies, give those details. Okay. Next. Has company been declared a willful defaulter? Who is a willful defaulter? A person who has purposely defaulted on the loan. For example, like Vijay Mallya is a willful defaulter. Okay, we have got Choksi, who is a willful defaulter under this Gitanjali Gems, that company. Okay, so in that case, when we have got willful defaulter, if company is able to pay the loans but they have not paid their loans, okay, and they have been declared a willful defaulter, or they have used the loans for some other purposes, they took it for one purpose and used it for something else, siphoned off the funds of the company, then if the company has been declared a willful defaulter by any bank or financial institution, then we should see, give the details when you were declared as a defaulter and what were the details of the default, amount, nature of default, etc. give. So we just want all these details. Okay. Then, does company have any relationship with struck off companies? What is struck off companies? Who have been removed from the register of companies. Okay, so we can have, companies which are removed maybe due to some wrong things they have done or whatever, they have got their own norms. So if they have deleted, I mean they have been removed from the register of companies, in simple words, they are no longer companies or valid or legal companies, and our company has got any relationship with them, right? Then we need to give the details. Do they have any transactions with companies which are struck off under section 248 or section 560 of Companies Act? Then disclose. Disclose what? Investments. What is the name of that company? What are the transactions you have with them, with those struck off companies? Have you invested? Have you got some receivables, or there is something payable to them? Whatever it is. How much is the amount? And relationship with the stock of company. So we need to give that. Okay. We means here who company has to disclose in their notes to accounts. Okay. Then, are we also aware that we have to register our charges with the ROC? Whenever company creates a charge on their property, they have to inform ROC about it. You have to, file a registration charge. You have to give it with ROC. So have they done it in time? If not, whether any charges which are to be registered with the registrar have gone beyond the statutory period, give the details and the reasons thereof. See, all these things are really not affecting I'm repeating, balance sheet, P&L. No, these are only additional disclosures. Okay. Then, again, in your law, you have learnt about number of layers, like 2 layers of companies we can have, right? You cannot have anything beyond 2 layers. And there are some ways, some rules relating to that. So if you have not complied, your company has not complied with the number of layers prescribed under your layers, those rules, okay, then we need to give the name of the companies beyond the specified layers, relationship, extent of holding, etc. Disclose everything. Okay. An important point number 12 has come now, ratios. So now we have to give certain ratios also in our Schedule 3 requirement. In our notes to accounts, you have to give all these ratios there. And not only ratios, we have to give the variance analysis. You have to compare it with previous year and see if there's significant changes in the ratios. We have to give the reasons for that also. Okay. So which are the ratios to be given? These ratios you have learned in your FM. Current ratio, debt equity, debt service coverage ratio, ROE. We have got, right, inventory turnover ratio, etc. Trade receivable, trade payable turnover ratio, NP ratio, etc. All these ratios, ROI, we need to give these ratios. And as I told you, not only giving the ratios is enough, you have to explain how you have calculated those ratios, what is included in the numerator, denominator for calculating these ratios, and compare that. Compare that with your previous year. If there's any change of more than 25%, right, you have to give those explanations. So this is what I call as my variance analysis. So compare it with last year, and if the change is 25% or more, explain why it has changed. quite, I would say, very insightful changes they have made now in my schedule 3. So a lot of things now we will get to analyze about the company. Okay. So I hope these ratios are clear. So these are the ratios, and like I said, how the numerator, denominator and variance analysis you need to give in the notes. Then, if the company has gone for a merger, amalgamation, again we have got our section 230 to 237 of our Companies Act. So if there's any arrangement which has been approved by whom? By the tribunal. Competent authority here means tribunal basically. Again, there's these all sections deal with those arrangements. Arrangements here means it could be merger, amalgamation, right? All those things which are happening. There could be restructuring of debt, etc. Any of these schemes are approved by the authority, whether the company has been a part of it, they have to disclose the effect of such scheme and whether they have been properly accounted for as per accounting standards. When I say accounting standards, AS 14 deals with amalgamation, we know. And if you are an Ind AS company, then it is going to be Ind AS 103. So whether they have properly done the accounting, all that we need to, they need to give it in their notes. And last point in my balance sheet is utilization of the borrowed funds and share premium. Now this looks like a big point, but it is not so complicated. Okay, it looks big, but just understand this. Okay, now what has happened here? Company, okay, has given some loan or investment, they have advanced given some money to one company. Company, let's call this company A, has given to company B, and they have told company B that you will have to invest this in company C, or you will have to give the loan to company C, or you will have to give guarantee for company C. So A is giving to B, and with the understanding that B has to invest this in C. So A is not directly investing in C. A is doing it through B. So here A is our company, B is the intermediary, and C is the ultimate beneficiary. Okay, so we have got 3 companies involved in this. So A, like I said, is not doing directly, it is doing indirectly. So these kind of things we need to properly disclose. Okay, so like I just said, what is it? We have got the first one is the company itself. Okay, so company is investing in an intermediary. See here we have got intermediary, with the understanding that this intermediary has to invest it in another company which I call ultimate beneficiary. Okay, now why they are not doing it directly? There could be money laundering reasons. Okay, or there is this concept of terrorism financing. To curb this, to avoid this, no, this particular point has come. Okay, so if company is doing this, then we need to give the details in our notes. Okay, so what is company doing? I'm repeating, company is giving loans, advances, investments to any person, entity, including foreign entity. This intermediary can be a foreign company also, foreign entity also, it could be any person, doesn't matter. But the condition that company is putting this money in that intermediary is that, with the understanding, whether writing or otherwise, that the intermediary shall do what? It is going to directly, indirectly lend or invest in other person, which we call as the ultimate beneficiary, or they will give guarantee security for the ultimate beneficiary, right? So if this is the scenario, so then what we have to give? See, we are not saying don't do it. We are no one to say that. Let company do what they want. We are just saying disclose. And interesting point, this has also come in our section 143 reporting of our auditing. Okay, in auditing, already auditing amendments lecture is put on YouTube. You can see that there. Okay, if you want, I'll attach that lecture also here. There also this point has come. We have to report as auditor also for the same thing. Okay, and company has to mention it and disclose it in their own financials. So like I said, Company has invested some money. What can it be? Invested, advanced, loan, whatever you call it. Company has invested or given loan, correct? Advanced, any amount, whatever you call it, doesn't matter. It's just that you have invested the money in this intermediary with the understanding that intermediary has to give it to the ultimate beneficiary. Then what does company need to do? Company shall disclose. What shall company disclose? The date, the amount of the fund advanced, details we want of the intermediary, right? We want how the amount was further advanced or loaned to the other intermediaries or ultimate beneficiaries. We want the details of the ultimate beneficiaries. See, I told you company has put in intermediary and the intermediary is putting it an ultimate beneficiary. There can be multiple intermediaries also. So A is giving to B, B is giving to C, C is giving to D. Possible, no? So we have to give all the details of even those intermediaries and who is the ultimate beneficiary. Okay. Then the guarantee, we have to give the amount, security, whatever is given. And most important, whether the provisions of the Foreign FEMA Act have been complied with and the transactions are not violating our Money Laundering Act. So that's what. So it should not be some kind of, they are doing some tax evasions here or they are doing some black money conversions here. No, that's not what we want. Okay. So this is what company has to give all the details of these things. And to add it, I said even in auditing, you have to report about this. So this is my first scenario. Second scenario, now where in A point we saw what? Company is intermediary, company is putting it in intermediary, intermediary is given to ultimate beneficiary. But now what if company is receiving money from someone? Okay. So then that becomes the funding party. Now what is the second scenario? Second scenario, what happens? Company is in between. And what is happening? Company is getting money from funding party. So funding party is giving some money to the company and company has been requested in writing otherwise or informed that they have to invest this to the ultimate beneficiary. So in simple words, in this situation, company becomes the intermediary. Are you getting it? So scenario is same. Only difference is in the first part, company was the, you can say the funding party. But now here company has become the intermediary. So have you received, see, received any fund from the person, entities, including foreign entities we call funding party, with the understanding that you will have to invest this, lend it to another person, or it could be on behalf of the funding party to the ultimate beneficiary, or give guarantee on behalf of them. So same thing, now we have to disclose. What all you will disclose? The amount of fund received from the funding party. We want details of each funding party. We want how it is further advanced, given to other intermediaries or ultimate beneficiaries with the details of them. The amount of guarantee, etc. And again, where the provisions of FEMA have been followed and it is not violative of our Money Laundering Act. So like I said, in both the points, the difference is the position of the company. In the A part, company is the initiator, they are like the funding party. In the B part, company is the intermediary. Okay. So this is how you have to give, that they have not violated any act, they have not done anything wrong. Okay. It's just that you have to give disclosures. And like I said, in auditing also you have to report about it. So I hope this is clear. All these points which we saw, almost these points, like we have got 14 odd points, right? All of these deal with what? Disclosures, additional requirements as per my schedule 3. It's almost over now. Balance sheet part is done. Aging schedules and all we saw. Ratios is important. P&L, only one format change in P&L, which we call now total income. Can you see? Revenue from operations we have plus other income is equal to total income. Earlier this was called total revenue. Now we call it total income. Simple? Okay. That's it. No other change in my P&L. All over. Same, everything. Additional some points we have got. See here. Point number 9. Undisclosed income. What is this undisclosed income? Give details of any transactions not recorded in the books which have been now disclosed as income during the year for the tax assessments which have happened. When some tax assessment, some unrecorded, undisclosed income came in picture in the tax part, then we also have to disclose here that why it was not shown earlier. Now it has come. So whether it is properly recorded in the books or not, we have to give it here. Has it been properly recorded or not? Okay. So it could be of your previous years, of course, due to search or any survey, anything which the income tax department has done, and they have found out that company has not disclosed some income. Then now what has been done about it? Has it been properly brought in the books or no? Has it been brought in the books? We have to give that in the notes. Undisclosed income details. Okay. Next, we have got CSR related points. So section 135 deals with CSR. So whether the company is covered under 135 section and they have to follow spend on corporate social responsibilities, this CSR spending details we have to give here in the notes. How much is the amount to be spent? How much was actually spent? What was the shortfall? Any previous year shortfall? What were the reasons for the shortfall? What activities they have done? Any related party transactions involved here? And if provision is made, whether it is properly shown separately from your other provisions. So simple words may I want CSR details to be given here. We are aware that companies have to spend on corporate social responsibility towards the society. Okay. So for that and the details we have to disclose in the notes. And last one, again a very welcome change relating to cryptocurrency, because now this is virtual currency, very budding and important part. Okay. So if company has dealt with cryptocurrency, have they traded or invested in cryptocurrency during the year, then disclose the profit or loss involved in that, the currency held on 31st March, and deposits or advances from any persons for the purpose of trading in this currency, virtual currency, cryptocurrency, whatever. We want details of that. Okay. So now with this, my schedule 3, all the requirements have been covered. Only the starting part is really which affects my 2-3 points in the beginning which I told you. One is in the format of the balance sheet, one is small format of the P&L, total income they say, and some 2 items which were shown earlier somewhere else, now we are showing somewhere else, like security deposits and long term current maturity of long term debt. That's it. These are the main things. So I hope schedule 3 requirements are clear now. That's all then. Keep smiling always.